All right, welcome back, ladies and gentlemen. Today's lesson actually is lesson 4. Let me just bring this up over here so you guys can see that. So we have it set up. There we go. But we have some catching up to do on lesson 3. Might need to kind of cut lesson 3 a little bit, move lesson 4. It's like the second or the third time that's happening. I always constantly keep adding new content of some new images and so on. And I mean, good for you, but not as great for me because I run out of time, and I have to kind of lay out the lesson plan a little bit differently. But I just want to give you guys a heads up. Just keep in mind that we are going to be doing some big changes to the courses in the next few months, where we're going to be cutting these clips to online clips, so it's a little bit easier for you guys to track them, where we're going to do 5-minute clips, 10-minute clips, with the recording. So we're going to modify the training for you to make it easy and flawlessly and kind of educate you guys a little faster. So look forward to those little updates. But let's go straight into lesson 3. I think we were on, what, slide number 20, I think it was, right? '21? Okay. I'll know right away when we get there. Yep. There we go. We're on slide 21. All right, good. All right, so basically what we're going to do is going to pick up where we left off, and what I'm going to talk about here is basically how important total view is. Now, this is one of the things that I kind of stress more than anything when I do my free events. I just don't understand why anyone would trade without knowing who their competition is. You always need to know where the big buyers are, and that is your competition, and those are those iceberg orders. So we need to know and see those at all times. Now, I have a couple of examples over here. Now, what we're going to be implementing today in lesson 4, we're going to talk about charts, and we're going to implement the high-frequency trades, which is all these iceberg orders, to these to the chart. Now, when you look over here, ladies and gentlemen, and you see the chart right here, what I want you to focus on is on the right-hand side, and you can see here at $4.34, there's a big seller of 27,000 shares. Now, remember, it's not the 200-share seller, it's not the 100-share, it's not the 4,500-share seller. It's the 27,800-share seller that makes resistance levels. Now, we're right now trading right here at 430. All right, you could see that right there. Let me get my little pointer out here. There we go. So this number is not that number. That number is this guy down here. Now, I want you to kind of keep in mind that this 27,000 share seller could have been the person at 451, but maybe he lowered his offer when it went from here to here. But you see how the stock from 10:30 to 11, how it's consistently staying here? It's not going anywhere. Well, the reason for that is because of this. Now, you'll notice right here, you see the low right there? Does everybody see that low? Everybody see that? Okay, see how you have a high and a low right there? That low right there is probably this 5,000 share seller out there at 425. Okay? It's not the guy at 429. It's not the guy at 428. It's definitely the 425. So always keep in mind that even though you see this little choppiness, this is called, remember we were talking about in Traders Talk about shakes, and we were talking about entries and exits and basically scalping like I did on that trade earlier. Well, this is basically a scalp. This is basically if you bought it at 25 and you sold it at 434, that's basically what I did. Those are pullbacks. Very good. Yes. So here's your basic answer when you're looking at the support and resistance levels. When you're looking at a stock like this, look at that big seller out there at $8, okay? At $8 for 55,000 shares, that is your iceberg. Now, I know Rwanda was telling me, says, Fausto, what happens if there's no big block orders out there? She was asking me in Traders Talk. Now, you have to look at it this way. It's the iceberg orders that are going to make a predominant support and resistance levels. If you really don't see a big block order out there, then you really don't want to trade it. I mean, you just don't want to. Find one that does. Remember, you're basically, what you're trying to do is risk the least amount of money with the high amount of reward. So you need to find those big block orders. Lori's a question. Does that mean that the stock will go to $8? Well, if it is trending down, and I mean, listen, 810 for 6,700 shares and the 25 shares is not going to support the stock at all. I mean, yes, and it's not going to go to 8. It's probably going to stop at 801. Let's get my pointer out here. Okay. Here's another example of a big block order. It's actually one of my favorites, actually, this slide right here. There is your resistance. You know, there's your support. You can see you have some resistance levels here. Why is my color pretty ugly? Red, there we go. There we go. So there's your resistance. Once you break through a resistance, that resistance becomes support. And, you know, the thing you got to look at, you're probably seeing like, well, there's a guy of 10,000 shares here at 8, which makes perfect sense. That's your support levels. But it's just not this 10,000 share buyer. You got 10,000 plus 5,000 plus 2,000 plus 1,600 plus 2,100. When you add that all together, it's close to maybe, what, 21,000 shares within that range right there. So if this stock was to go down, that's where you probably want to be focused on buying it. And you could see, but we're not here. We're here, right? So if we're here, that's resistance, and probably that would explain that 1,600 share seller out there. Now, if it broke, let's have a little pop quiz here, all right? If we go past this 815, what is our next resistance levels, everyone? Can anybody tell me? What's your next resistance? 820, I mean, yeah, I mean, that's probably not, remember, it's not substantial, but it's something. So even though you don't see it here on a chart, which you probably need to go back further on a chart, but yeah, definitely you got it right there. And if it breaks that, then 25, and then maybe 28. Now, where are we going with this? All this? Game plan. Remember, you need to have a game plan for every single trade that you make. Here's another one. Look at the high right here. Okay, so everybody see the high? It says $16.34. All right, I'm going to teach you one of Wall Street's biggest secrets. And I know some of you already know this. Don't ever, 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 ever sell stocks that end in zeros and fives, because everybody else is going to sell at zeros and fives. Okay, like look at this example. If you go right here to sell the stock right there at 10,000, look at 1635. If you just sold a penny cheaper, you cut the line by 10,000, because he's going to get executed first. If you go to 1635, you sold 1,000. Well, you're going to be last on list. But you can, if you what we call shaving, if you shave, meaning you sell it a penny cheaper, because remember, a penny's not going to kill you. At the end of the day, you're going to make money. You made money on that trade. You sell a penny sooner. Now, the thing I want to point out is this is why that stock went from here to here. And look what happened when it hit that high right there. It went right to 1635, and now look where it is, 1623. Always have a game plan at all times. All right, so let's have a little pop quiz here. I know some of you already know the answer to this one, so please don't share it. Okay, to buy at zeros and fives. No. John, you never, ever put orders that end, buy or sell, that end in zeros and fives, okay? All right, Wayne. Better to buy at a penny above. It beats the sport. Exactly right, Wayne. Absolutely. All right, so now let's look at this one. The stock hits a support here, went to resistance. Support, resistance. Now the stock is at support. So what does everybody think is going to happen to the stock? Is it going to go up or go down? Dave says up. Anna says up. John says up. Justin says up. D says down. Wayne says up. It's funny because a lot of ones that are saying the same one are beginners. Why do you guys think it's gonna go down? Tracy thinks it's gonna go down. Tracy, why do you think it's stock gonna go down? Well, it's at support, right? But why is it gonna go down? That's right. Here's your seller for 10,000 shares at 1620, which explains that guy and that guy, right? Well, we have a 10,000 share seller, but we're not trading. That's the past. This is the present. Where's our 10,000 share buyer? See it? Any buyers out there? You see what you did, Justin and Lee and John and Nita? David? You need buyers to make support. Well, that's the past. This is the present. If there's no buyers, guess what? It's going to go down. So now here's the next pop quiz. If there's no buyers, where do you see the next support level? Does anybody know? Where's the next support level? For 1,000, but I don't know. If that guy's not there, you probably could go all the way down here to First Boston at 1570. Not a lot going on out there, right? Big difference. You see how fast you could lose money? You see how fast about having a game plan, knowing where the big block orders are? There's no reason to go out there and not have that game plan. All right, where is the support and resistance levels on this one? So here you have the stock. The top one is an intraday chart. The bottom one is a yearly chart. Those are two popular charts that I like to have. And when you look over here, you can see how the stock basically, oops, I don't know what happened there. You can see how the stock started this morning at 9:30, went straight up to a resistance levels right around the 1180 or something like that. I think that's what that is. All right. So when you look at that, you're like, well, it's makes perfect sense. Long-term chart, boom, resistance, right? See it clear as day. That's probably why we went up there in the past hours, kind of holding there pretty strong. But remember, where does this get its data from? Why that number? Well, when you look over here, you could see, the major resistance levels was a 1680 right there, 1690. It's probably 1690. You have a 2,000 share seller out there. That's what you got going on. Oops, sorry about that. There we go. So you can see around 1690, about 2,000. So, I mean, it's not substantial, but remember what I told you earlier. This is why you got to be really careful to trade stocks that don't have big iceberg orders out there. Because, 2,000 is a hell of a lot more than, 500 and 300, but it's not like the ones when we see the 10,000s or the 30,000s or the $250,000. When I see somebody advertise that, I drool out of my mouth. I'm like, oh my God, this is this is like taking candy from a little kid. So the thing is, but some stocks are a lot more, don't have people that advertise those orders as big. And when I don't see them that obvious, that's why I won't be as aggressive on certain stocks that I trade. But you do get a little bit here. And not only that, but you do get a little bit here on the support levels. That's at 1155. You know, you can see it clear as day. So remember, don't trust the chart. Trust the buyers, because it's the buyers and sellers that make the support and resistance levels on the chart. Like here's another example. Here's another good one. All right. I think this is one of our last slides here. Yep. All right. This is I like this chart right here. This is a good example. All right. So you see this right here, ladies and gentlemen. You see ISB for 3,200. Okay, that's him. All right. Now, this is total view. This is level 2. All right. Now, between ISB, which used to be called Island, which is NASDAQ, between Attain, GVRC, Charles Schwab, you know, you're talking about 10,000 shares, give or take, right? 11,000, something like that, right? 12, maybe 12,000. All right, so you got 12,000 shares out there. But you see this guy right here for 10,000? That's him, but he should be here. You see how total view level 2 doesn't show you all the orders? So here you are, you're thinking, wow, there's 12,000 shares, but realistically it's not 12,000. In my eyes, it's 22,000, because that's a big block order right there, right? Does everybody see that? So now, big difference from 12,000 to 22,000. All right. Now, can the stock break a support levels at $1.99? Is that possible? Sure, absolutely. Absolutely. And if it does break it, where will it go? Will it go to $1.96? Yeah, it'll go there. I don't know if it's going to hold. But you're right. It'll probably come all the way down here to $1.90. You got PERT looking to buy 2,500, and on the ECN book, you got 7,800, and you got 9,000 at $1.88. So, like it or not, if you break the support level at $1.99, which is here, and those guys get done, it's going all the way down to here, like it or not. That's the next floor. Remember, if you break through the floor, ladies and gentlemen, in your house, where are you going to go? If you break through the floor, you go to the next floor. Well, Terry, it depends. Do you have are you living on a one-story house or on a three-story house? You know, you're right. You can go to the basement, but depending on what floor you're on, at the end of the day, you break through a floor, you go into the next floor, if you know what I mean. I got a ranch. That's fine. I totally understand. The reason why I say that, because in my house, I'm on a slab. I don't have a ranch, so I don't have a basement, so I just have to call it the first floor. I go from the second floor to the first floor. Well, Lori has a very good question. Why don't we see Knight, Attain, GVRC, Schwab orders on level 2, on the level 3, or do we? On this one, I have it eliminated. I don't really care about who it is. I just care about the orders. But remember, level 2 is only going to show you his best bid, but it's not going to show you all his bids, okay? So I don't really care Schwab's not here. All I care about is aggregating the orders and seeing the big block orders. That's all I really care about. Trying to keep it more simple, Lori. All right. So keep in mind, ladies and gentlemen, big block orders that trade on total view, which I call level 3. Take no big block trades, control the market. This may provide you with an idea as in which way the market will go ahead. And don't forget that. All right, so we're done there, ladies and gentlemen. So let's go to lesson 4. And talk about shorting stocks and chart strategies. Now we're gonna as we move forward, and you're being in the cyber group room, we're gonna see the ECN book a lot. So don't worry about, what we have and what we see. We're going to be using this very, very, very frequently if you haven't done it already. Did everyone start ordering the get the total view up and running? Now, I know some of your brokerage firms might have it, but I kind of tell everyone just buy through NASDAQ anyway, just to make sure it looks exactly the same, because some people say you have it and they really don't, And then some of them, honestly, don't even look as clean as the one the brokerage firms give you, because they might put everything in there and it's overwhelming. So I kind of get rid of it. Not NASDAQ keeps rejecting you, Virginia? Where do you live? Why would it be rejecting you? That's pretty weird. Did you call them up? Or email them? You should be able to get a hold of them. I never heard that before. Yeah, definitely do that. I mean, that's not normal. You shouldn't have that problem. All right, now let's go talking about one of my favorite things I like to do, but sadly I can't get them all the time. But basically what I like to talk about is shorting and dominating market makers and charts. But before we do that, let's talk about market makers. All right. Now, there are market makers and there are market takers. So there are order makers and order takers. There are people who take orders, and there's people that take orders to make money with. And there are two different kinds. On the left-hand side, these are order takers: Charles Schwab, Knight Securities, E-Trade, TD Waterhouse, Scottrade. So, I just want to kind of give you guys a little bit of a refresher that when you see these market makers out there, and on your dashboard, I have a list of the top market makers out there. So, and I'll repost it there again for you. But if you don't have it, but you should know who they are, because not all of them are pretty predominant market makers. There's only a few of them. And over here on the right-hand side, you could see Goldman Sachs, Morgan Stanley, Merrill Lynch, Shearson, First Boston. These guys are order makers, and they're trying to make money with the order. So when it comes to trading, ladies and gentlemen, you're going to always see the dominating market maker on both sides. They're always on both sides. Somebody asked me, well, why would Morgan Stanley buy a stock at 34.04 and sell it at 38.63? I said, it's very simple. You got a calculator? What's 37.04 minus 38.63? When you come up with that number, what the answer is, times that by 1,000, and that's why he's there. Okay? They're always looking to take profits. Always remember that. Tracy is saying, why does stocks move away from big block orders? Why do stocks move away from them? Well, it's a resistance level. Remember, supply and demand, Tracy. Wayne, okay, Wayne is kind of answering Gardini's question. NASDAQ told me the software is a software issue. Gave me a free trial until it's resolved. Okay. I guess that answers your question. Would think they would move towards them to execute. Well, Tracy, listen, why would you want to, you're going to, you get into a brick wall. Why would you want to sell it as close as you can when, the only way you're going to sell, now this is something that all of you guys have to keep in mind. The way you're going to be a successful trader is you have to buy into supply and sell into demand. Does everybody understand that? Buy into supply, sell into demand, meaning you have to sell while there's a demand for it. Now, most people be like, why would you want to sell stock that's going up? Well, because if you know where resistance levels are, you want to sell it while people are still buying it, because once it hits that resistance level, it's going to go down. Nobody's going to want to buy a stock from you that's going down. No one wants to sell you a stock that's going up, and that's why these market makers, if you notice, they know where the support and resistance levels. They have their game plan, and that's why they're there. No problem, Tracy. You're more than welcome. So here's an example of support and resistance levels. You could see right here, let me get my pointer out again. And you could see right here how that's major resistance, that's major support, 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 resistance. And when you're shadowing brokerage firms, you could see Best is out there looking to buy it at 610 and looking to sell it at 608. And not only that, but you could see some ECNs like Island and Arca. And the reason why I know they're ECNs, a lot of brokerage firms will highlight them with a little pound sign next to them. And you could just see it. You got 1, 2, 3, 4, 5 buyers at 607, 1, 2, 3, 4, 5, 6 sellers at 608. It's almost like common sense. Now, everyone always, it's funny. I did an event the other day, and someone says, Fausto, it seems so easy. If it's so easy, and you tell everyone, everybody's going to know how to make money. I'm like, all right, great. I'll see you in class tomorrow. And then guess what? He says, okay, how do I do it? I says, sign up for my class. He goes, oh, let me think about it. And I'm like, all right. And then I told everyone right after that, this is why you don't have nothing to worry about. Not everyone's going to want to make an investment in their education just because, even though it looks simple, believe me, there's a lot more involved, which some of you mentioned earlier in Traders Talk. How do you control profits and losses? How do you know exit and entries? Well, that's where discipline and experience come into play. Well, like anything else, Tracy, you just started, and you got to know how to keep it simple, Tracy. Remember, the hardest thing that people make is it's the discipline part of it, and it's the hardest thing that the problems that people have more than anything, Tracy, is the greed. Like, for example, let's talk about that trade I did earlier this morning, all right? Let's talk about let me bring it up. Let me just show you. INVN, let me just bring that up. Let me just bring this up over here. Hold on. There we go. INVN. Let's look at this trade right here. Does everybody see this? Okay. This is where the greed comes in. I bought it at 17, and I sold it at 16.24. Now, if you notice, some people will be like, well, why did you sell it? Let's bring it up over here. And where were we? Okay, we bought it right here. Okay. So we bought it here, and people will be like, well, why did you sell it? Because it went up all the way to the 30. They're like, well, listen, there's no guarantee it's going to go higher. And you know what? It came right back down where I sold it, and look where it went. It went right back down to 16.10. So you got to understand something. Most people be like, oh, it's going up, don't sell it. Or it's going higher, and then some people are like, oh, it's going to go higher. It's going to go to 52, back to 52, and look where it ended up. So you can't be a pig. You can't be greedy. You got to keep it simple, and it just comes with experience. All right. So that's what market makers. Let's talk about shorting. Well, thanks a lot, Justin. We just have to be patient, Tracy, and just keep trusting it, and you'll learn it. Listen, listen. Brett will be the first one to tell you. I don't know if Brett's in this meeting. Is Brett in this meeting? I don't even know. Yep, Brett's in here. There you go. I didn't see you there, Brett. Brett, how long you been trading with Cyber Trading University? How long's it been? About 3 years. And when did the light bulb go off? How long did it take you? A year-ish, okay? So there you go. All right, so Tracy, I know you just you didn't even come up to a year. You should start learning within 3 months what's going on, And then with the experience, I always tell everyone, things start slowing down, and you could be calm. You don't have to worry about being like how I just showed you. I bought the INVN, not even thinking twice, and getting out, not even thinking twice, and not worrying about trader's block. So it'll come in naturally. It's got to be very, very patiently. No problem. Now, how to short? Let's talk about shorting. Listen, I love to short. The only problem is I can't short all the time because not every stock is on my short list. But if I do get an opportunity to short, shorting has been a lot more fun. Shorting is like an option trade. The problem with shorting, though, is, once again, not every stock is on the short list. You could only short what's in inventory. Now, you notice we short a few times in the market, and what's nice about shorting is an old saying about shorting: whatever goes up comes down twice as fast. So think about it. You make twice as much money. People more panic more than anything. So that's why shorting can become very, very, very exciting to make money. So when it comes out to trading, guys, just be very, very, very careful on finding and preparing to short, because what I always do is I always check to make sure the stock is on the short list with the brokerage firm I have before I short. So does everybody know how shorting works or what it is? Everybody know what shorting is? How about this? Anyone has ever shorted before? On paperweight? Okay. Good. All you're doing is borrowing stock from another brokerage firm. That's all you're doing. You're asking them, I want to borrow your shares, and you're gonna sell their shares for them, but you owe it back to them at the same price. The reason why the stock is not on a short list is because they lent it to everyone. Now, I don't want to go into and bore you about the history, but there was something a long time ago that was called a naked shorts, they used to call it. Ever since 2008, they changed the law. They changed a couple of rules. First of all, you're now allowed to short stocks on a downtick arrow. You weren't allowed to do that a long time ago, and that's when it made shorts so much more fun and more easier to make money. But what they changed the rule is that you were able to short stocks if a brokerage firm doesn't have an inventory. So that's why now you'll notice it's a lot more difficult to get shorts, because brokerage firms can't lend you stock that they don't have. So that's why it's kind of been really, really difficult to get shorts off. Yeah, and that also too, Ron, you can't short in your IRA. Well, that's not the American dream, right? That's why we don't have IRAs. They make you go in an IRA to invest the money into companies for growth, not for negativity. That's the difference between a trader and an investor. I don't know too many people that invest to lose money, right? We invest to make money with a company. All right, so let's get to charts. Now, two simple words you need to know about charts: support and resistance. That is the only words that you need to understand when it comes to trading. Now, I have something that's called my little hangman here, okay? And I always do this in all my classes because, I don't know, I just feel it's a very simple way of comprehending what a chart is. So here's a ladder, and here's your little hangman over here. And what happens when you walk up a ladder, the first thing you do when you walk up a ladder is you look up. And the reason why you look up, because you don't want to hit your head. Well, you can't see the future, but you could see the past. So the whole idea is if you just take your eyes off the screen for a second. Can everybody do that? Look what's above you. If you climb up a ladder, you see that ceiling above your head? That is resistance. You know how high it is. You know how far you can get before you hit there. You know eventually when to slow down. You know, you see the ceiling, all right? And when you walk down the ladder, what you do is you look down. Why? Because you need to see the floor. Because the floor is support. That is what's supporting you. So whenever you look at a chart as being in a building. You got floors and ceilings. and you always need to know where are you. Now, getting back to the building method, get my crayons there again. Here's the second floor. Here's the third floor. Here's my guy over here on the third, and here's my guy over here on the second. Okay. So if you climbed up the ladder, most people will look at this and says, oh, resistance levels is 25, because everybody's looking what we call, this is what they call a head, a peak, a handle, and then you get these are called, people call these a teacup, they'll call it a valley, they'll call it a shoulder, you know. I just call them support and resistance levels. So everybody's got these fancy names, all right? So what makes support and resistance levels is buying and selling. But where I'm getting with this is this. You see that right there? That support level right there, when you break a support level, that support level becomes a new resistance level. So, and how do we do this? What we need to do is always draw a trend line. The trend line is your best friend when it comes to a chart. Always draw a trend line. And a lot of people make that mistake. So when we look at a chart right here, you have support and resistance levels. Now the first thing we always look at is a one-day chart. Now I have my charts defaulted to a one-day, 1 minute, and a 1 day yearly. So it's a 1 minute chart for the day and a 1 day for the year. Now the thing is this, you look at a chart right away, and if you notice, my charts are very, very simple. You know, the funny thing is, when I was in Toronto, I had a couple, husband and wife, they were looking at the stock and they were saying, they're like, my God, I finally is something I could read. Because people get so crazy with these indicators. You'll see how simple it is. And when you keep it simple like that, you can get a little bit of a game plan to know where you are in the chart. Now, the only indicator I use, that I personally use, this is the only indicator, the only one, is this. Trend lines. I just go straight across. I just want to know wherever I am, and I want to see, am I anywhere near a previous support resistance? That's all you need. Draw a trend line. It's as simple as that. And you'll see by changing the slides how important those support and resistance levels are. Because when you go back in history, remember, this is a 4-day chart, 15 minutes. When I implement the yearly chart, and now we're looking at the daily chart, you could see right here, when you draw a trend line, you got resistance levels here, support levels there. You could see it clear as day when you go straight across. Now you know why that stock, when it got to a certain price, it backed off. So go back in history, but the most important tool that you need to do is draw a trend line. And you'll be amazed, and you guys know this. You're guilty of it. I see it all the time. How many of you guys draw a trend line? Not that many. But you'll have some indicator tell you where to go, and that's not what you want to do. Okay. Justin says, I just started doing it now. Well, it's never too late. Another thing that you'll notice about trending, the one thing about charts, is that the trend is your friend. You don't buck the trend. And when you look at a chart, another strategy, what we do when we trade in the market, is we always want to know what the trend is. The trend of the stock. Is it going up? Is it going down? You know, where is it trending? How is it trending? And you could see here, we're looking at a 2-day chart. And if you see the 2-day chart, you see right there the first arrow. See this arrow right here? Okay, this is 4 o'clock. You see how the stock came down and it came up a little bit, but at the end of the day, it literally was trading at the lows of the day? Okay, once the market was over at 4 o'clock, you see how the thing just gapped down? And then right here, this is 9:30. Look how the stock went from 33, it closed at 34, opened up at 33, and boom, went right back down to 31. Great short. So just kind of tell you a strategy about going into the close of the day. People always tell me, it says, Fausto, how do you know what stock to trade going into the close? You know, what exactly how do you find stocks? What do you do in the afternoon? Well, I'll look at trends. You know, I'll look at trends and see what we have, and I'll go from there. If I see something I like, I'll trade it. You know, I'll follow it in the morning. It all depends on how it closes. Like, I'll give you an example right now, okay? Here's a stock that they're looking at right now in the Cyber Group room, OCN. Okay, you see how the stock is trending up? Does anybody know why OCN is going up? Any idea? Why is the stock going up, OCN? Anyone know? Demand. Okay, Keith, I like that one. Very good, supply and demand. Does it have to do with news? Does it have to do because the market's down 14 points? Deb says it got a dividend. Really? Is that what it is? I had no clue. Oh, it's going into Devin. Well, this is the reason why. The stock was at 26. It dropped down to 20. It's one of the first days it was up. We saw the stock a couple of days ago. You know, whatever the news is, maybe somebody's averaging down. And it doesn't matter. That's right. Abdul, does it really matter? But here's a stock that's trending at the highs of the day. It's getting into the close. This stock is something that might continue going into tomorrow. And it might even go all the way up to the 23 price range right here. But when we go into if you want to know how to trade going into the morning, sometimes following stocks the day before and see how they trended will continue the following day. Well, there's Gary. Gary figured it out. Obviously, he came out with some news. This is the problem with news. Do you really know how to interpret it? Do you really know if it's good or bad? Because I've seen stocks that beat earnings and they end up going lower. So here's the example of the stock of how to trend stocks and know what's going on. So always keep in mind, know what the trend is. Remember, the trend is your friend. Don't buck the trend. And you can see how the stock the day before, how it trended down, and then all of a sudden, people don't want to take a loss, and then it goes down. I'm going to tell you a funny story that happened last night. We were doing anyone joined us for the option event that we did yesterday with Greg McDermott, 8 o'clock at night? John, you did? Okay, good. I know a bunch of you are going to be joining him tonight for his options class. If you're a swing trader or an options trader, you got to take that class. So after this event, I hope everyone already signed up for it because it's a great deal, and at 80% off because the first one he's doing, you definitely want to have access to it. But the funny thing about the whole thing was, I had somebody there telling me, he said he didn't believe, he didn't understand why day trading was less riskier than swing trading. He heard the opposite. Day trading, people go out there and keep telling everyone, day trading is so risky, it's the riskiest thing out there. And I'm like, well, first of all, who's telling you that? Are they day traders or are they investors? Okay? And they swing traders. The reason, you got to remember, the best way to explain swing trading is if you're going to take, I don't know, $13,000, like the stock right here, and leave it and come back in next morning, hopefully it's going to still be there. Anyone feel comfortable with that? Or would you rather just sell it, come back the next morning, and then at least you could stand there and watch your money and see where it's going? What do you feel more comfortable? Do you like leaving it there and hopefully nobody steals it? Or do you like to hold on to your money and then, you know what? What happens, happens. At least I was there to kind of police it. Yeah, there you go. Dana says, I sleep better at night when day trading. You make your days pay and that's it, because it's a job. You're just trading for the day. So you do. You're right, Gary. When it comes to swing trading, you take more of a risk, and there is more of a reward. Listen, anything you risk more, there better be a better reward to it. Otherwise, it's not doing it. But the thing I want to point out about Greg McDermott, this is why I love options trading, because there are people who lose so much money in options, but they trade options for the wrong reasons. Now, remember, Greg McDermott, if you do trade swing trading, you got to learn how to trade the options, because to me, options is like leasing a car. The funny thing, I was at the dealership the other day and had a guy bought a car, and he says, I can't believe it. I bought this BMW. A 2011, I paid $120,000 for it. $120,000. He just traded it in, and the dealer only gave him $45,000. So when I was doing the math, right, what does that come out to be? $120,000 minus $45,000 comes out. He lost $75,000 in what, 3 years? And then he goes, I should have listened to the guy who told me to trade the option on it, which is not really an option, another option. That's why they get the word options. He said I could have leased it for $1,000 a month times 36 months. You know, it would only cost me $36,000, and I don't own the car. I have to worry about selling it. So just so for anyone here that leases, it's basically the same thing. And you know what? If I want to buy it after the lease is over, then I would buy it if it's worth it. But let's put it in their hands, and that's the great thing about the options trade. Right, Dana. A lease would be better. It's kind of like an option. Exactly. Okay. Just want to point that out, because I have people that always. If you notice here at CyberTrading University, we don't teach swing trading anymore. We got rid of it because I just felt it's just too much risk. It's too much risk. It's not worth it. And for the amount of money, I'd rather just, like you're looking at this chart right here, I'd rather just sell it and buy it back. But the thing about this gentleman last night, and he wasn't really a heckler. He was just kind of like, I think he just didn't understand. But because people think that day trading is more riskier, and I said, listen, the reason why you hear so much bad things about day trading is people were not day trading, they were swing trading, because it all came about in 2000, and that's why they came out with the stupid day trading rule and all this other stuff. But the thing, at the end of the day, they were not day trading, they were swing trading. Day trading is in and out the same day. Okay, but when you hold a position overnight, once you hold it overnight, you are no longer day trading. You're no longer a swing trader. And let me tell you, unless you can lose all that money tomorrow, you do not want to do that. Now, the good thing about charts also, if you notice, the pre-market. Now, a lot of you have been seeing, I did that pre-market workshop. Yeah, they were. David Sue says, yeah, they were swing trading during the day. They sure were. They thought it would be there tomorrow. Listen, day trading, you got to state your post. You don't leave things laying around. The Jenkins program is actually very, very good, Rosie. Because he has a lot of certain programs. But once again, if you want to be a good swing trader or investor, you got to learn how to day trade, because that is going to help you understand how the system works better. Okay, you don't want to go out there, and I know Chenkin very well. He's got a great program, and I like it. I know it's geared towards more that swing trading, and you can use it for day trading, but you can use it towards the option. Why not use it for an option play? Why go out there and spend all that money? Just borrow it from somebody, so you pay a couple extra pennies more. Big deal. Right? And that's where options. But I don't want to take too much time away from that. I want to focus here on the charts because we got about a little less than 10 minutes. I want to finish up. We got about 4 more slides to go. So let me talk about the pre-market trading. Now, I know a lot of you here, gold and platinum students, you got the workshop last week, and we kind of really went over in detail about the pre-market, how it works. So make sure you review that recording. But I want you to know on the chart side of it, if you notice when I do the morning meetings, you notice I always look at the pre-market and I always look at the chart. And if you notice, you see how sometimes it gets spotty like that? Okay, depending on what the direction is, the direction of the chart is going to give you a sense of where the market's going to go. So in the pre-market, you know, the trend is your friend. Now, is it 100% guaranteed? No. But you know what? I tell you it's about 70% close. Trend is always there, always, because remember, like today, I did a trade. I did an investment because I really like the company Fiat. All right, so I just bought it. I said, you know what? I like the company. It's up a lot, and I don't care where I get it. I just want to own it. I just want to own it because I think it's a good company going into the market. Now, if I bring Fiat here, you could see how it had, you know, right at 9:30, the thing just basically just kind of like, this is why you don't trade the first 5 minutes. But it had some support levels here. It's got good trend levels. It's kind of holding pretty strong here. I own it at a bad price, not the end of the world. I own it right here. I bought it at 11.10. All right, but if you look at it, the trend, you could see how the pre-market trend here, because it's not about where I own the stock. The whole thing is like, look at the trend. And then finally when the market opened up, how the thing went up. I mean, that's what you have to look for. That's pre-market charting, like you could see right here. This is why I tell you, sometimes I'm in trades right at 8:30. I mean, look at it, 8:50. Look how the thing just took off. And here at 9 o'clock, look how much room it had. It went from 10:40 to 11:50, up a buck. So pre-market trading, there's a lot of insider stuff that's going on. That pre-market trading is going to help you out. So you always want to focus on that pre-market when it comes to trading when it comes to trading and looking for that pre-market. Now let's talk about indicators. Which chart is easy to read, everybody? Chart number 1 or chart number 2? Which chart's easy to read? Well, they're both mine. You know, I love using this chart because of, if you look right here, ladies and gentlemen, if I told you the stock was trading at $7.95, you could see clear as day the price to own it is at $7.90, because that thing is going to go down, and it's going to test it, because those $7.90 support levels, if you look at total view, there's probably iceberg orders. And then if the stock goes up, and right now you're at 810, well, you better have a game plan to get out at 815, because that's your resistance levels. All right? But when you look at a chart, you know, you get these people that says, oh, but when the Bollinger Band crosses with the MACD, and then you got 3 candlesticks on the red side, you know, and you add it up, then it's going down, you know. And it's just, listen, indicators work good for, you know, it does not work for day trading. It works for long-term swing trading. It works for investing because you have time to digest and you have a game plan. It does not work for day trading. So if anyone ever tells you that, do yourself a favor, run far, far away from them, because they are not a day trader. And if you don't believe me, when you watch the New York Stock Exchange, you see the floor traders out there, you tell me, number 1, how many charts they have up, and number 2, try to count every indicator that's there. You know what you see more than anything? You see orders. You don't see indicators. Indicators make you sound good. Indicators make people, you know, make you sound right all the time. Indicators were invented by mathematicians. They were not invented by day traders or traders, period. Now, it does work for Forex because, once again, Forex trading, you're not day trading Forex. You're holding for a couple of days. So you have a little time to digest. Does it work for swing trading? Yeah. Does it work for options? Yeah, because you're holding it for a week or a month or a year, whatever it is. But it does not work for day trading. So I just want to make sure, because I do see some of you that are day trading that are still stuck on using these indicators. Because the first thing I always learned when I started teaching, I always noticed people, the first thing everybody wants to learn is indicators. But that's why, but I always tell everyone, you should all go out there and interview your mentor and see what kind of trader you want to be. Do you want to be a day trader? Do you want to be a swing trader? Do you want to be an investor? You want to trade an options trader? Because There's so much that's involved when it comes to trading. And when it comes to a situation like this, you got to be very, very focused on those big block orders out there, but more than anything than an indicator, okay? But keep things more simple, everybody. All right, let me just change the slide here and move the slide here. There we go. The best indicator I tell you what to use is just the trend line. That's it. Just put the trend line. Because this is what ends up happening. I love this slide. I use this all the time. There's people actually who can read this stuff. I don't know how they do it, but you know when I look at the bottom one, I see clear as day support levels is $6, right? I mean, you could see it right there. You definitely got support levels from there, from August, September. How the hell you find it over here is beyond me. So that's the funny part about the whole thing. Yeah, I mean, yuck, you telling me, Debbie? It's, some people try to figure it out day trading, but I don't know why. All right, so coming up to one of our last slides, everybody. The market's closed. But what we have going on right here, just keep in mind, if you kept things simple, look for the big block orders, see the big block orders, buy it at support, sell at resistance. You could see it, you know, support levels on the chart at 670, resistance levels at 680. What more do you need? And then when you implement the level 2 to confirm and see those big iceberg orders, that's just going to make your lives that much easier. All right. Now, this is what you have to do for homework. All right. Now, I know tomorrow we have, hold on. Hold on. Let me just, all right, there we go. All right, so what you guys need to do for homework is you need to start working on your charts. All right? Start simplifying them. Start taking out all the nonsense. Start taking out all the indicators and all the Bollinger Bands. Start deleting it. Start working with things that are clean. Try to keep your charts to a 1-minute chart and a 1-day chart. Try to get away from all the noise. All right. I know maybe some of you spent a lot of money on doing this stuff to learn it, but I'm telling you, you keep things simple. Remember the KISS method. Keep it super simple. You're going to understand a lot more and see a lot more that you would see than if you threw all that, all those indicators in there. Do you place orders in the pre-market and wait until 9:30? Gardenia, yeah. I mean, until you're a little bit more of a level 3, level 4 trader, Gardenia, I don't recommend you to do that. Until you could learn how to make money during the market hours, be very careful trading pre-market, because sometimes you can cause more damage than good. Think you can get Thinkorswim to do a top 20 versus a top 10, Deb? I talked about them a few times, Deb. I'm planning on going there to do a speaking. I'm trying to shoot for next month or December. I'll let you know, but I'm going to talk to him again. I did mention to him a few times. It's a lot of work. I know that they do have a top 20, but they do it a little bit differently. It's what these market makers want to do. They feel is priority. But we have it for you anyway, so you're going to see it on our end. That way you aren't pulling up sick watt. I know. You got to remember, Deb, that platform is very geared towards options trading. I mean, listen, are you taking the Greg McDermott's class tonight, Deb? Because he knows that system up and down. He loves that system. But once again, Greg is an options trader, and that system is more geared towards it. They never, and everyone that works there is more geared towards options. Maybe you should think of using the TD Architect version. It's a little bit more stock friendly. Not that you can't trade the Thinkorswim platform on stocks. It's just, it's more really focused on, on that options. It is, Dan. It's very good for all the Greeks and everything else. It is, Terry. The Architect is simpler because it's more geared to that kind of a trade. That's why I always tell everyone, don't go crazy opening up a brokerage account. Talk to your education advisor over here. Let them know what you're using or what you're looking to do and what you have been doing, and we'll tell you where you should go about moving forward with it. Okay? Oh yeah, I definitely like their charts. Their charts are really, really, really nice. Yes, and there is a pre-market scan built into the Thinkorswim, Gary. Okay. Dan, another thing is if you listen, for all the Thinkorswim people out there, just to let you know, if you go to, this is what I recommend if all the Thinkorswim clients, okay? If you go to Cyber Trading University, click on Resources, all right? I want you to click where it says here, View Offer on Thinkorswim. And with Thinkorswim, just to let all of you know, if you fill this out, where is it? They're giving you, there you go, 30% off on the trade. So you basically right here, what happens when you fill this out, you're going to get contacted with one of our reps over there, or you're going to have the person's contact information. So there's some way to save yourself some money there. All right? So your $10 ticket will go down to $7? Yes, and TradeStation is doing the same. So, but we're getting it up shortly. So stand by. We're going to get it there. Hold on. Hold your horses for a little bit. But guys, don't forget, I hope a lot of you guys registered for the options course for tonight with Greg McDermott. Don't lose this opportunity for the $199. This course is originally $1,000. After today, when he's done with this class, you know, this class could be $1,000. It's great for all you swing traders and or people who trade options, or the ones that are scared to trade options. Don't miss this opportunity to take this class. All right? Yeah, well, Graham, we're going to get to TradeStation. Don't worry about it. We're almost there. We just got the approval from their compliance department, and then you'll see it on our list within the next couple of days. All right? But for everyone else, don't miss this opportunity to take this class, okay? Because I don't want you guys coming back to me and say, oh, but because some of you are already saying, but I missed Phase 1 and Phase 2. Well, you know what? You still get Phase 1, Phase 2 at a discounted rate, but don't come back and say, you know what? Now I want to learn it. It's the last opportunity you get. I don't want you guys to miss this opportunity today. And also, everybody, make sure you are registered, because tomorrow we start Phase 2. Okay? So if you're a gold and platinum student, make sure you are registered for the retakes on that too, okay? So tomorrow we're starting Phase 2. That's where things start getting a lot more fun. All right, everybody. Thanks, everybody. So I'll see everybody tomorrow for class, and then for everybody else who's going to be joining Greg McDermott, hope you enjoy it, and we'll talk about, see how you guys did yesterday, but I think you guys are going to like it. All right, everybody. In the meantime, thanks, and I'll see you all tomorrow morning. Bye-bye.